It feels like everywhere you look, you hear news of tech stocks soaring and tech stocks breaking new record highs and, of course, a tech stock bubble. So if you are investing in tech stocks or you were thinking about investing in tech stocks, make sure you watch this video until the end. What's up, everybody? I am Jaspreet Singh from theminoritymindset.com and welcome to the Minority Mindset. What do Amazon, Apple, Facebook, and Google all have in common? They all let you take a nap at work? No, yeah, they do, but that's not where I'm going with this. Amazon, Apple, Facebook, and Google were all grilled by the United States government for being too powerful. And I don't know if Amazon lets you take naps at work. This pandemic helped these big tech companies make a whole lot of money, and with that, tech investors made a lot of money too because these tech stocks won't stop going up. Welcome to the world of tech stock mania, and in this video, I'm going to be dissecting what's going on in the tech industry. But before we get into that, smash that thumbs up button below, because if you don't, well, the way the YouTube algorithm works, YouTube will be less likely to show you any of our other financial education videos. You might have heard of the acronym FAANG, which describes the big tech stocks out there. FAANG stands for Facebook, Amazon, Apple, Netflix, Google, and sometimes Tesla. The T in Tesla is silent, or I guess you could call it FANGed, but that's up to you. And just so there's no confusion, Google is owned by a company called Alphabet. So if you wanted to invest in Google, you'd have to buy shares of Alphabet. But for simplicity's sake, in this video, I'm going to refer to Alphabet as Google. These FAANG or FANGed stocks are pretty big power players in our economy and our stock market. Like at the time of me recording this video, Apple, Amazon, and most recently Google are all valued at over $1 trillion. Apple became the first trillion-dollar company in the United States back in 2018, and when that happened, it was pretty big news because everybody said that Apple was too big, these corporations are too powerful, and we shouldn't have any trillion-dollar corporations. Well, now we have three of them: Apple, Amazon, and Google. That's why the United States government had a hearing with the CEOs of Apple, Amazon, Google, and Facebook because the government wants to see if these companies are too big for their own good. In technical terms, Congress wants to see if the antitrust laws, which are the laws that help with competition, are fair in the tech industry. Now, as a quick caveat, none of the men and women in Congress who are in charge of making this decision are business people. None of them are tech people, and none of them are entrepreneurs. They are well-paid politicians, some of whom don't believe in email, and others of whom don't have any idea of how social media works.
Well, how do you sustain a business model in which users don't pay for your service?
Senator, we run ads.
I see. That's great.
Now, we don't have a final conclusion as to what's going to happen with tech companies just yet, but I'll be keeping you updated on our YouTube channel. So if you haven't subscribed to our YouTube channel yet, make sure you do that and hit that little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. But if we move past the political issues to the business issues, these tech companies benefited pretty nicely because of this pandemic. If you lost your job, you're going to be sitting at home with your laptop or your phone in your hand, and you're going to be searching, when is my next stimulus check coming on Google. You're going to be looking at what your friend ate for lunch on Facebook. You're going to be shopping for toilet paper on Amazon, and you're going to have to buy more iCloud storage for all the lockdown selfies that you took. The world was already moving digital. This pandemic just put that shift on hyperspeed because it forced everybody to live their lives online. Now, as an investor, you might be wondering if this tech boom has more room to grow. Well, the answer is not a simple yes or no. There's a few factors that you have to look at. The future is digital, so there's definitely going to be more room for the tech industry to grow, but the question is, should you be investing in tech? And that's going to depend on a few things. How long are you planning on investing for? How are you investing in tech? And what are your investment goals? If you were hoping that I was going to come here and tell you that, oh, the tech bubble is going to burst, so you need to short Amazon, or I think that the tech bubble is going to go up forever, so you need to go and buy Apple, well, I'm going to let you off the hook right now because I can't predict the future. That's not what I'm here to do. There's way more to investing than just finding a hot stock, okay? I'm here to help you understand how to invest your money. That way you can make smart decisions with your money. That's why the first question you need to ask yourself is, how long is your investment plan? If you're looking to invest your money for the next 6 months or the next 12 months, you're going to be looking at stocks very differently than somebody who's looking to invest their money for the next 10 years. That's why you should not just listen to blanket statements like buy Amazon today, because that doesn't really tell you anything. Is there a chance that we are in a tech bubble? Sure, yeah, bubbles happen. But that doesn't mean you can't make any money in tech. I mean, there's a lot of money to be made in bubbles. And secondly, if we were in a bubble, that doesn't mean it's gonna pop tomorrow. That's the tricky thing, right? I mean, we don't know if a bubble would pop tomorrow or 5 years from now. Big tech has pretty much been going straight up like this. Now, many times in the past when we have seen big growth in companies, oftentimes you will see a correction in price. There's a chance that could happen again. And we also have the risk of more regulations being put on these tech companies. And if that were to happen, that would probably make the tech stocks come down as well. So if you're a short-term investor, that's something you want to pay attention to, because many tech companies have seen their valuations skyrocket just in 2020 alone. And these companies aren't really cheap either. I mean, many tech companies are selling for more than 100 times earnings. If you are a long-term investor, so you believe in the long-term future in tech, and I'm not just talking about a year, I'm talking about many years and even decades, then you shouldn't be worried about these short-term dips or crashes. I mean, these short-term dips and corrections are just opportunities for you to come in and buy more stock or investments that you want at a discounted price. If you really believe that this tech is the future, then you should just be regularly investing in your investment portfolio like normal, every week or every month, whatever your schedule is, and use a dip or a crash as an opportunity to just buy more shares at a discounted price. This brings me to the second thing you need to understand. How are you investing in tech? You can invest in individual companies by buying shares in Amazon or Apple or Facebook or Google, or you can invest in a tech ETF and get exposure to the whole tech industry. If you took your whole investment portfolio, for example, and you put it into the Amazon stock, that is the riskiest way to go. I'm not saying this because I think Amazon's gonna go bankrupt in 2022. I'm saying this because your whole investment success is dependent on one company's, Amazon's success. If Jeff Bezos, the founder and CEO of Amazon, does something really bad and he drives the Amazon company into the ground, or if Amazon gets heavily regulated and a new company comes in and they take Amazon's spot, well, your Amazon stock is gonna go down the drain. If you don't believe me, ask Jeff Bezos himself. He gave a speech where he said that Amazon will eventually fail. He doesn't think that Amazon's gonna fail tomorrow, but he does believe that one day something's gonna come along and they're gonna take Amazon's spot, and they're hoping to delay that as long as possible by innovating, but he understands that that's reality. So investing in individual tech companies can make you a lot of money, because if Jeff Bezos does good things and Amazon stock doubles or triples, so does your investment, but it also comes with the most risk. The alternative is you can invest in a tech ETF, which gives you exposure to multiple different tech companies, or kind of like the tech industry as a whole. For example, if you go out and you buy shares in QQQ, again, I'm not telling you what to buy, just an example, but you will go out and buy shares of this QQQ ETF, but QQQ is invested in Apple, Microsoft, Facebook, Google, and Amazon. QQQ is invested in a bunch of other companies as well. Those are just some of their top holdings. So going this ETF route has less risk, because now you don't have to try to pick and choose the best company. The downfall is your returns are kind of mitigated as well, because your returns are going to be normalized and averaged out, because let's say Microsoft goes bankrupt, but Apple skyrockets. So your returns are going to be averaged out with some of the winners and losers. I know many of you watching this probably believe that the internet and tech is the future. I mean, I do too. That's why our company, Minority Mindset, is a financial news and education company, and we are 100% digital. However, as a smart financial planner, you don't want to overload your portfolio with only tech stocks, because if something happens to the tech industry, like if the internet shuts down for some reason, then your portfolio is going to be very strongly hurt. I mean, after this pandemic, anything is possible, so I'm not ruling anything out. And I know, very strongly hurt doesn't make much sense, but you know what I'm trying to say. If you want to invest in stocks or ETFs, you can use a stock brokerage like our sponsor, Webull. All you have to do is create a free account, fund it, and then you can buy or sell whatever stocks or ETFs you want right off of their mobile app or the computer, and you don't have to pay a penny to make a trade, because they are a commission-free brokerage. I'll show you how you can do some research. So we were talking about QQQ, and if I search it, I can click on their ticker symbol, and now this has their current stock price and some information. I can see what's going on with the news, I can chat about it with other users, or I can come here to Profile. Profile here is going to tell me some information about QQQ, this ETF. And if I go to asset allocation and I scroll down, I can see, okay, this fund invests mainly in stocks. If I come down, I can see, all right, this is investing mainly in the technology sector. And if I come down some more, This is going to show me the top holdings of QQQ. And the best part of all is that Webull is giving you, Minority Mindset fans, 2 free stocks just for investing with them. You get your first free stock when you open up a free account, and you get your second free stock valued at up to $1,400 when you deposit $100 into your account. So if you want to learn more and see how you can get your free stocks, I got the link to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. I mean, it's free to open an account, and they don't charge you a penny to make a trade. So if you want to learn more and see how you can get your free stocks, I got the link to where you can do that in the description below. The third thing you want to look at is your investment goals. One of my biggest investment goals that I've been working on for a number of years now is passive income, which means regular checks coming in the mail. That's why I love investing in real estate and dividend paying stocks. A dividend is when a company is making a lot of profit, and at the end of the year they have a lot of cash sitting in their bank account, and then they use this cash to pay out you, the shareholders of this company, a regular check every 3 months or every year. You don't have to do anything special to get this dividend check. You just have to invest in a company that pays out a dividend. Well, tech companies are notorious for not paying dividends because they want to use as much cash and profit as they can to reinvest this money back into the company to grow as fast as possible. So I have my own goals of how much I'm investing for passive income and how much I'm investing for growth, and you need to have your own too. By the way, this is one of the reasons why so many tech companies don't make a profit, and it's one of the reasons why Amazon doesn't pay taxes. Amazon would invest so heavily into their business that they would lose money every year, and so these losses have been carrying forward that now they don't have to pay taxes because they have been losing money for so long. So if you don't want to wait to sell your stock to make any money, then tech probably isn't for you. If you're okay with that model and your research tells you that you have a good stock in mind, then go for it. Just make sure you do your own due diligence because, well, investing has risks, and you are never guaranteed to make money when you invest. You might even lose money. So make sure you never blindly listen to a random guy on YouTube. And one thing you can do that will help you make smart decisions with your money is stay up to date on what's happening in the finance and business world. And if you're looking for an easy way to do that, well, that's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free, and you can subscribe to our finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our finance and business newsletter is separate from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about how you can research a company and find a good company to invest in, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.